What up? I'm Eric from SanDiego Surfer Investors. I'm here to unite people within the surf community that want to make money in the stock market. Making money in the market is fun and it can pay for surf trips. As you know, I'm a walking advertisement for Investors Business Daily. I suggest you read Investors Business Daily and use the CAN-SLIM method when picking stocks. In my episode 1, I go through some more criteria and things that should be used in picking stocks, and I want to touch on, I'm not sure if Jim Cramer coined the term buy and homework, but I like that. I like it better than buy and hold. You should do your homework. Prior to buying a stock, you should really immerse yourself in whatever the individual company is, try and learn everything you can about it. And you should continue to do your homework, reading the press releases that the company comes out with on a daily basis, and really keep up on their quarterly reports and new things, new innovations, things that are going on with your company. Investors Business Daily, since the year 2003, their IBD 100 top rated stocks have greatly outperformed the S&P 500, being up about 137% versus about 32% for the S&P 500. I'm going to today continue with my report on HANS's natural soda, because there was some things that I left out, and if you noticed, I got the price per share wrong a little bit. The current price per share is right around $39 a share. The DSD segment of their business is the energy drink business, which includes Monster Energy. And there are other variations of Monster Energy, Lost Energy, Mad Joker. They have different brands, but that's their crown jewel, is their energy drinks. When I first learned that that is 90% of their business, I was blown away, because the warehouse segment that makes their juices and their natural sodas, every time you go to the supermarket, Costco, wherever, you see them, you know, always there at the retail stores. The energy drink is 90% of their business, which shows you how big that part of the business is. Hansen's was started by Hubert Hansen in 1934 with his grandsons. It was a company that made mostly juices. In the 1970s, Hubert's grandson Tim began the natural soda segment of the drink, and by the time it came to be 1989, this was a company with $17 million in annual revenue. This was a company that in that year was purchased by 2 South Africans that came to the United States, California, and were looking for a company to buy. It was suggested to them that they take a look at Hansen's natural soda. They bought it for $14.6 million, less than a 1-to-1 price to sales. As you know, I like to use price to sales and compare price to sales of prices of stocks. You know, the next time somebody offers you or suggests that you buy the stock of a company with a market cap of like $455 million and they only have annual sales of maybe under $80 million, there's a specific company I'm thinking of right now, I would stay away from something like that. You have to look at growing revenues, and no company is worth an infinite price. You have to look for things that are priced reasonably. Now, I want to also talk about something is people want to differentiate between value investors and growth investors, but I suggest you don't make that distinction, because really a large component of value, of good value in a stock, is good growth. So to me, they're intermingled. Now, the non-US sales are what are going to drive the growth of Hansen's. As you can see here, from '07 to '08, from 54 million to 94 million is approximately 80% higher year over year. From 94 million to 168 million from '08 to '09, that's around 65–70% right there. So it's a growing company, and like I said, I see them in the next couple of years being able to achieve $500 million in revenues per quarter. Their second and third quarters are their strongest quarters. But now, with the company going global, they've added a dimension by having southern hemisphere countries like Brazil and Australia, which is going to help even out the seasonality of their strongest quarters. As you know, Red Bull has been around in the United States since 1989. That's when they entered the U.S. market. It was a Thai company, which in Thai is Krating Dang, which was discovered by an Austrian by the name of Dietrich Mateschitz, who is now the CEO of privately held Red Bull. The first year they came out in Austria was 1984. Within 1 year, they had $1 million in sales. They're currently sold in about 100 countries throughout the world, while Monster Energy is sold in about 40 countries at this time. Now, there's a similar parallel between when Pepsi entered the market of sodas as when Monster Energy entered the energy drink business, which the energy drink business is currently a $30 billion industry, controlled mostly by Monster and Red Bull. In third place is Rockstar, privately held as well. Monster Energy was the idea of Mark Hall. They interviewed people from the action sports industry, which was the segment they wanted to be represented by in society. And the parallel is that when Pepsi came to market in 1934 against Coca-Cola, who had been in business for about 50 years at that point, it was 5 cents for a 6.5 ounce Coke. Pepsi came on the market, 5 cents for a 12-ounce Pepsi. Now, what they did when they came in to the market this was in 1996, is they came with a 16-ounce Monster versus an 8.3-ounce Red Bull. At that time, Monster came from nothing to the present 2010, where Monster controls 33.4% of the U.S. energy drink market. Red Bull, 23.5% of the market. Now, as far as dollar share, you know that it's a 16-ounce versus an 8.3 ounce. They have Red Bull has 32.5% of the U.S. market, and Monster has 26.7% of the U.S. market. Now, they can do this in other countries. I think they can be neck and neck with Red Bull in other countries. Warren Buffett says not to concentrate so much on quarterly earnings, but on return on equity. A 35.6 return on equity is very good when you compare it to other growth companies. This means that the earnings are making it down to the capital base. The ratio that is the return on equity is operating earnings divided by shareholder equity. That's where you come up with this 35.6. The PE ratio on trailing earnings currently 17. Very reasonable for a company growing at the rate that HANS Energy is growing. You can see here the growth in sales from 2007 to 2010. Here is the growth in earnings. This loss of 26 cents per share in the fourth quarter of of '08 was when they changed their distributors. It cost them $118 million to make the change, which pretty much happened here at the end of '08 and the beginning of '09. That is done, and now they have been lowering. G&A has gone down substantially as a result of that change in distributors. As I said, Coca-Cola Enterprise is their distributor in Europe, and this company is growing. Rodney Sachs, in the last conference call, which was about a week and a half ago, he said that overall orders for their products in April and May of 2010 is very strong.